Thank you very much, folks. High noon in the financial capital of the world, New York City. It's also the media capital of the world. And we have only 98 days left before the largest tax hike in U.S. history. And now we're going to have to wait until after the November elections to find out if Congress is going to take action to prevent it. Unusually, the street, Wall Street anyway, likes gridlock. Usually the street is happy to see a little bit of gridlock in Washington. But are today's markets getting an extra little boost from Washington's indecision? We're going to ask that question today. Hi, everybody. I'm Cheryl Casoni. Joining me for the entire hour. He's got the answers. I know it. James Frischling, co-founder and president at New Oak Capital. No pressure, James. FoxBusiness.com's star reporter Dunstan Prowley. Got to get the star in for Mr. Dunstan today. And on this phone, I want to bring in James. Nicole, hang on. I want to bring in James into this because I'm curious about the action that we're seeing on the street. In particular, I'm curious if any of this happens to be with regards to what's happening in Washington, or you think it's strictly this economic data, which frankly, as Nicole kind of pointed out, was okay. But does that justify a 177-point day right now?
Well, I guess two thoughts on that. One is when it came to taxes, I had thought the administration's focus on that was more about elections and politics than it was about the economy. And then now the suspension of that and leaving it kind of for a future date, I think creates that gridlock that you were talking about. It means they're going to stand quiet on that. I also think that, and quite candidly, on another network this morning, there was quite a significant hedge fund manager who has really made a name for himself throughout this financial crisis, making bets. And he simply said, heads, the stock market's going to go up if the economy basically stays as it is or improves a little bit. Tails, the economy's going to go up. Sorry, the equities will go up if the economy falters because the Fed will step in. So heads, stock markets win. Tails, stock market wins. And I actually think a lot of this rally has to do with his bullishness. He didn't go. He's not going full throttle.
You're taking it on one particular gentleman, but I have to say, Dunstan, we have seen we're up more than 7% right now for the month of September for the Dow. So this guy's side.
I'm confused today because it seems to me that this is a temporary boost. If this gridlock continues, we all know that on January 1st, a huge across-the-board tax increases. How can that be good for the economy and or the stock market?
Right.
And I will tell you, I'm not loving this rally right now because I don't think the financial markets can go so far ahead of the economy. So the durable goods numbers notwithstanding, I still think you have the financial markets, which should not be confused with being the economy. The economy right now,
I agree.
They're still suffering, but the financial
temporary.
I like your points, James. I really do like that. And Nicole Petalides, I want to let you go.
If I could ask, it seems like the oil industry, and particularly the Gulf, is getting hit two ways. One, the tax issues you just raised, and two, in terms of the moratoriums that are currently outstanding. How do you think that's going to fare? I mean, first of all, do you think the pendulum will shift back and they'll find a more middle ground? Because it seems like this is a double whammy to the industry and to the region, and also to the competitiveness of the companies that are trying to operate there relative to the folks who can operate just outside Florida through Cuba or others. Any thoughts on that in terms of competitiveness and again, the double whammy that's hitting this industry right now?
Well, drilling in the region is essentially shut down. Whether you're talking shallow water or deep water, it's closed. We're closed for business down here, and we have been closed since Deepwater Horizon. The sad fact is there's no plans on reopening us. At this point, if you just think about the mechanics of imposing new regulations, we would have to have those new regulations revealed pretty much today to allow time for public comment and hearings if those were going to be actually enacted by November 30th when the moratorium ends, which suggests to me that this moratorium is going to officially end, but we still won't have any new regulations and we still won't have licensing of drilling operations for quite some time. I think at that point, that's when rigs start leaving because now you have a much more open-ended risk, which goes back to some of the comments earlier. While we have the gridlock in Washington, we have political risk. Businesses and investors don't like political risk. You can't parameterize that. You can't measure that. At best, you can lobby and hope that your message gets through. But right now with the gridlock, it's not getting through. And this political risk is a tremendous risk for U.S. economic growth right now and recession recovery. Fall's a very volatile time. I'd be careful of the market gains that we're experiencing this week. They could go away very quickly. Every major financial crisis that's happened throughout history happens in the fall because traders come back and they're trying to feel out what their portfolios are,
Sure.
trade them up, and it might not work this time.
Okay. All right. I've got another question for you from a colleague.
Sure. If I think about the trading environment right now, there are many who say the market's illiquid, and actually my observation would be at the right price, when things are priced correctly, there is plenty of liquidity. We're talking about the underperformance or poor performance of many IPOs, and maybe this is an obvious question, or maybe you just stated this. Your company has been successful, and the market was welcoming of that. Is it therefore so obvious that the 61% of poorly performing IPOs, should these companies not have been brought to market? Or I guess my question is there some money on the sideline, or a lot of money on the sideline? Is there some skepticism from the retail investor that might be contributing to a greater share of IPOs underperforming? Or is it just, again, good companies find good buyers?
I think it's the latter. Good companies find good buyers. We were very surprised by the quality of investors that looked and put orders into our book. They were all top name, top notch types of investors, and I think it goes back to a good company can find good investors, and the market, the potential's out there.
All right, well.
But I think the asset has to be priced right, though.
Best guest time. Reminder, read everybody's best guess on my latest commentary at GasoniExchange.com. Follow me on Twitter. Find me at Cheryl Gasoni. By the way, I actually just posted up a bunch of stories and some things about wine and food when I was in Bordeaux, as I was just talking to Jamie about. All right, best guest time. I'm going to start with James. What do you have, sir?
Wall Street 2, Money Never Sleeps, in theaters starting today, and the return of Gordon Gekko, the man or Wall Street that immortalized that era and the phrase "greed is good," in a fictionalized version of the 2008 financial crisis. In the real crisis, the fact is the "greed is good" mantra actually proved to be unfortunately very true, and gains were privatized, losses were socialized, and here we are with the return. So I don't know how Mr. Gekko is going to fare, but my best guess is simply I expect to see more Gekko Halloween costumes coming up, and I certainly hope that we don't see more people acting or in Oliver Stone's created a villain that people wanted to be like. I'd like them to be more like the honest Wall Streeters that earn their living in the financial markets every day.
Because there's actually nice people that work in Wall Street.
That's what I'm promoting.
By the way, Dunstan.